Hi and welcome to DNB Carnegie and our interview with FBC. My name is Markus Almerud. I'm an analyst here at the bank. I got with me Adam Philpott, who's CEO. Hi, Adam.
Hey, Marcus. Great to be back with you.
Likewise, thanks for being here. Exciting times. You released Q2 earnings this quarter, the second one with just the core operations.
Yep.
You continue to grow sales, 56% organic growth, so good traction. What was the driver behind that sales? And maybe if you can refer just what is the market growing at, what kind of pace?
Yeah, so to give you a benchmark on the market's growing at about 20. There's a lot of data out there as to what the market growth rate is, and then there's a lot of segments within the market. Fingerprints actually slightly lower as a modality, but of course, as you get smaller, it gets harder to predict the market. So we go with the higher 20% because we want to benchmark ourselves against the very best data to make sure we drive performance. So market, slightly lower, but 20% is what we use for the overall benchmarking. Obviously, we grew a lot higher than that. We grew double that at 40%. If you take the first half, it's 66%. So we feel really good about the growth in the company. Core business growth is something in our transformation plan we're really focused on, obviously. And then you asked about the drivers of that. What we've done is move to markets where not only there's growth potential, but there's profit potential too. So profit, has been really important to us. It's not just getting growth, it's getting profitable growth. And so I was really pleased to see both those numbers in a good place for Q2. Drivers of it, we're moving up the value chain as well. We used to just sell sensors. Now we sell systems. That offers value to our customers. It means greater wallet share for us and good margins, of course, because we're less, not in a commoditized space. And so really all of those things are the drivers of it. In the core markets that we face, people are looking for simplicity and convenience. Easy to use, very secure as it relates to ascertaining identity. And fingerprint is a very, very high efficacy, low cost way of doing that with a great user experience. So we're in a really good place in that hardware market.
And talking about profitability, and maybe mainly focusing on the gross margin. I mean, it's around 50%.
Yeah.
Is this a sustainable level? Is this where you should be at?
Yeah, I think 50% is about right. We're a hardware business, so actually 50% is pretty good. But we take 50% is pretty much the benchmark for where we want to be. Is you look at the first half, because we will see ebbs and flows depending on deal mix by quarter. It's about 53% for the first half. So again, we're right where we want to be, but as you know, we're talking to both myself, Frederick, and the board. We're never satisfied. We're always looking to optimize and push up the value chain as well. So we're continuing to try and do everything we can in our operation to optimize margin. We're at a good place though. Make no mistake, 50% is a really good place for a hardware company. We're just looking to constantly be better than that. At the same time, as you know, we're looking at diversifying towards software, obviously higher margins from software. So those are some of the things that we're looking at for the future, of course, as well.
Mm-hmm. But at the moment, it's primarily hardware.
Pure hardware. Yeah. That's the benchmark. Absolutely. Yeah. So performing very well against the benchmark, but obviously always looking to optimize further.
Another big thing that happened in the quarter was the monetization of assets, which is an important part in your strategy. And you had the license deal with Egis assets regarding the PC assets. $2.5 million. Explain a little bit about this deal and what does it mean?
Yeah, so first of all, it's great cash onto the balance sheet. I know we've had to do a few rights issues and a lot of our shareholders worry about future dilution. That's exactly why we're focused on not only driving core growth, but we're also looking at asset monetization, whether that be license deals, patents, or asset monetization such as the Egis deal, because it just gives great funding for the business, but also gives investment funding for future growth as well. So I'm really pleased about that. One thing I will be super clear on is that happened after quarter end. So when you look at the quarterly earnings report and you look at the cash balance, that excludes any money that came in after the quarter from Egis. That money hasn't been collected yet. That will be collected in Q3 largely, and then a small amount in Q4 as well. So as you think about the cash balance, it's important to make that clarification. In terms of the deal, it's monetizing assets that we have in markets that we've left, right? So we got out of the PC market. It was unsustainable for us, for the burn. And so, we got out of that market. But because of the value we were able to create there, organizations still want to consume our product, but it has to be delivered by an organization who can deliver it within the realms of the margin that it can yield for them, right? And that it was untenable for us. So partnering with Egis, they can operate at the margins necessary, but they get best-in-class technology. The customers get served. The great thing for both of us is that there is an upfront piece in the deal for the assets. There's an ongoing development piece of the deal for ongoing funding for resources as well. And there's royalty too. So, we're developing tech with them. As we're more and more successful using old tech and new tech, the royalties will come in related to the success of that product too. So really nice balanced opportunity for both partners, I would say.
And looking at what you do have on the balance sheet and what kind of assets you do have, I mean, is it fair to assume that we will see, I mean, timing is always hard, but that there's an opportunity for more of these kind of deals?
Totally. I mean, I look at all of the things that we have as a company and how we can make money. We've got the core business. We're driving incredible growth in the core business way above market, and we're going to continue to do that. We've got a bunch of assets that maybe in markets we've left or in older products or in different areas that we can also monetize. We have different ways of doing business with customers around licensing deals. That's another opportunity. And then, of course, we have patent enforcement where organizations may be using our technology and not paying for it, or other types of patent opportunity. There's a monetization path there also. So I look at all of those levers we can pull and make sure that there's rolling momentum in all of those for us to monetize. As I said on the earnings call earlier, it doesn't mean it comes up every day, every week, every month, but we are constantly progressing those opportunities and we see more of them.
Mm-hmm. And looking at FBC today, maybe changing track a little bit. I mean, it's a much smaller company. Obviously, the core business is growing very rapidly at much higher profitability. And if we stay on growth, how do you plan to grow? What is the focus? And how much cost are you willing to take on to fund that growth?
Yeah. So I think I would break it up into, again, if you look at the transformation plan, there's core growth and there's new growth. Let's talk about core growth first of all. In core growth, we are seeing great response from the market, and we're just going to continue to do that with the resources we have. I don't plan to invest lots and lots on top of that. Instead, what I want to do is leverage modern tools to make our people more productive, or rather to allow them to be more productive. So we reckon we can get many more times productivity out of our engineers by them using AI tools. They're already using those tools so they can do things much quicker than they used to be able to do. So augmenting our staff with tools, same for the sales guys, same for the back office, etc. So, part of the business modernization plan that we have in the transformation program is to allow us to hold our OPEX in the core business whilst realizing growth by being smart about how we utilize those assets. I think the market has more growth potential in it, and we're obviously seeing that as a premium player as well. So that's a bit on the core markets. Where I would see investment is in new market, but we're being really careful about that, because what we don't want to do is stretch ourselves too thin too quickly. We need to manage the capital that we have coming into the business so that we can go and pursue those. And that's why things like these asset monetization deals help us invest ahead of the curve rather than on the curve or behind the curve as well. So it gets us to that growth quicker. The final thing I'll say, and I'll come back to core business for this, is I talked about bets. We have a number of bets. They're not kind of wild card bets. They're really opportunities that we think have the potential to give us growth. We don't know which ones are going to take off because it's dependent on our customers ability to be successful, right? And so we do see a number of bets that we've placed in getting design wins, etc., with customers that could well take off. And so that then will allow us to accelerate growth. So we monitor those very closely. We work very closely with those customers to accelerate the time to revenue with those customers and the magnitude of revenue we get from them. So those ones are really interesting for us to monitor also.
And you would assume that the market growth will be around 20%. That's kind of the benchmark level.
Yeah, that's the CAGR. That's the CAGR for the next few years. So that's the benchmark that we're using. As I said, Fingerprint is a little lighter than that, still double digit, but not quite up at 20. But we peg ourselves to that higher growth because that's what we want to compete for.
And what about inorganic? What are your thoughts on that?
Yeah, I mean, there are opportunities out there, I would say, that there's, the markets are at an all-time high. And so for us, it has to be the right thing at the right time at the right price. And of course, if we were to do something, that would need funding as well. So our priority right now, given some rights issues that we've done in the past, is to focus on a self-sustaining business, accelerating organic growth, using the income that we have as a company, both from our organic business and from asset monetization type deals, so that we can really prime the pump and get that business as big as possible, as quickly as possible.
And what would you say would be the main challenges in growing the business, and both on the core side and also on the new business side?
Yeah, great question. Okay, let me start with core again then. So on the core business, it's hardware. So think about it, right? We sell hardware systems. We don't sell end products. We sell systems to customers who want to incorporate biometrics. So customer A wants biometrics in their product. We go to them and show ours, and we compete with other people, and we typically win because we're very, very good. So they go through that process. That could take 6 months to a year. Then they start to embed our products, and we have to design it and fit it in. 6 months to a year. Then they go production and start to market it. Another 6 months. So you're looking at quite a long time. So I would say, the challenge that we face in our core hardware market is time. It takes time to be able to embed, get it out. And even then, the customer has to be successful. So what we try to do is compress time as much as we're able to by moving very quickly, by being agile, by winning as quickly as we can, by proving design wins as quickly as we can, and by advising customers. We don't just ship them product and say, there you go, good luck. We talk to them about other things that we've experienced in the market to help them be successful, because we see ourselves not as a supplier, but as a partner to them. So that's kind of the things that we do to try and de-risk and take time out of that cycle. On the new revenue side, so new growth, the second part of your question, it's a new market. We're market making. We're taking on passwords. Passwords have been around for a long time, and we're taking that on. So there's risk in doing that. But at the end of the day, those things are often much higher return. It's software, it's a much bigger market opportunity. So there's higher risk, but much, much higher reward when we're successful in taking that on. And so we're beating a new path, and it takes time. You beat a path, it's a dead end. You beat another path, and then you find through pivots, either in product or in sales, you find the right market and you're successful. That's very much what we're going through right now.
Mm-hmm. And then maybe looking down the P&L. I mean,
yes.
you have a good gross margin, right? You're still
Yep.
negative on the operating level.
Right.
But you're talking about, and you're right about reaching a positive EBITDA, being
Yep.
cash flow positive is very important for you.
Yep.
And you are getting closer, but you're not there. Is it
Yep.
sales which is a missing link? So what will get you to where you want to be?
No, I mean, I think it's, like I said, our core market is that time. Even in the new market is a bit of time as well. And so what we do as an executive team is manage the cash available to ensure that it lasts for the time necessary. What we also try and do, though, is we try and reduce the time to get to growth, whilst at the same time making sure we've got enough cash should that time be longer, right? So those are literally the levers that we're pulling as we run the business. So think about it. We've demonstrated a really strong track record in getting OPEX down. We've demonstrated a really strong track record in getting headcount down. We've closed and continue to close legal entities to reduce cost, but also improve simplicity and agility within the business. So that's the cost side of things. At the same time, we're growing ahead of the market. We've got a healthy gross margin. So we're continuing to focus to make sure we continue to drive growth and we focus on profitable growth at all costs too. So for me, it's about continuing to execute what we're doing, making sure there's enough different bets out there so that we can accelerate all of those things. And that's how we get to that EBITDA, free cash flow positive, as quickly as we can.
Mm-hmm. And then finally, maybe, I mean, you just had the board, you just had the AGM behind you. You have a new board. You mentioned it a little bit on the call earlier today. Tell us about the new board and what do you think, I mean, how do you think that they will be able to add value to you in the business?
Yeah, I mean, I'll tell you how I think about it is, in the past, I've showed that there are 3 stages in the transformation plan. The first was stability, the second was accelerate growth, the third was operational efficiency. And so, you know, with our previous board, we got to a place of stability, which was great. But the new board then, I think, comes in at a really nice time to get us to that accelerated growth phase. They've got incredible experience in scaling companies. They've got incredible experience in inorganic roll-ups, for example. They've got really strong go-to-market. So, you know, we bring in a very different type of board member with both John and Carl-Johan to help us take the business to that next level as well. And as I mentioned, I think it was to your question on the earnings call earlier, I couldn't be more excited about the possibilities that I think we have as a company with these guys in the board. And I actually think then look at the team that we've got. I look at the executive team we've got. I look at the people we have in the business, the engineering team, the sales team, and then I look at the board as well. It's a really strong operating unit now, I would say, which gives us a lot of potential for the future.
Mm-hmm. Adam, thank you very much for coming here to talk to us. Always exciting, lots of things going on, and I'm looking forward to keep following your journey.
Totally. It's a really exciting journey, and I appreciate you being on it with us, Markus.
Thank you very much.
Thank you.